Financial stocks dragged the Dow lower Friday after some of the biggest banks reported disappointing earnings. A drop in retail sales in December added to the gloom. Investors responded by rotating away from cyclical stocks back to tech stocks like Microsoft and Tesla, helping push up the Nasdaq. But Toes Asset Management CEO Phil Toes warns that tech stocks could get hit hard.
Similar to what we saw in the internet bubble burst, growth got hammered. And tech got hammered, and value did, on a relative basis, much better. So if this downturn continues, and we don't know that it will, but if it continues, value could potentially be a much stronger sector or place to be than growth stocks, where we could see 50% declines or more if it really picks up negative momentum.
The Dow shed 200 points, or roughly 0.5%. The S&P 500 closed nearly flat, but the Nasdaq gained more than 0.5%. On the week, the three indexes lost ground. JPMorgan Chase was among the top decliners on the Dow and S&P, dropping more than 6%. The lender's quarterly profit fell 14%. The bank, an economic bellwether, warned that soaring inflation, the Omicron threat, and normalization of trading levels could challenge the banking sector's growth in the coming months. Profit dropped more steeply at Citigroup, whose shares shed 1%. One bright spot, Wells Fargo. Its profit nearly doubled, topping Wall Street's targets. Leading the S&P's list of gainers, Las Vegas Sands and Wynn Resorts. Shares rose after Macau's government capped the number of new casino companies allowed to operate. Stock markets in the U.S. will be closed Monday for the Martin Luther King holiday.
Maersk posted better than expected fourth quarter results on Friday. The Danish shipping giant saw freight rates improve 80% compared with a year before. That more than offset a fall in ocean-going container volumes, which fell by 4% in the last 3 months of the year. Maersk put the results down to the global disruption in supply chains. Moving freight around is now a more expensive business because of it. Underlying earnings came to $8 billion. It was above the company's own guidance in November and outperformed analyst projections. Revenue hit $18.5 billion, again beating market expectations. Maersk is due to publish its full financial results on February 9th. The firm's share price was down more than 2% by early afternoon Friday.
The U.S.'s biggest banks kicked off earnings season Friday with mixed results. Quarterly profits dropped at JPMorgan Chase and Citigroup, but Wells Fargo bucked the trend. A slowdown in its trading business contributed to the 14% profit decline at JPMorgan. But a surge in investment banking revenue at the U.S.'s largest bank cushioned that shortfall, enabling earnings to beat analysts' expectations. Although a potential Omicron-induced economic slowdown and rising inflation could challenge the growth of the banking sector, CEO Jamie Dimon voiced optimism, saying, in his words, "The economy continues to do quite well." Citi's profit sank 26% as higher operating costs bit into its bottom line. Selling its consumer businesses outside the U.S. added to expenses. But profit at Wells Fargo nearly doubled, topping Wall Street's targets. It was propped up by a one-time gain. The bank had sold its corporate trust and asset management units. Investors rewarded Wells Fargo, sending its shares higher in early trading Friday, but driving down shares of JPMorgan and Citi. Rate-sensitive bank stocks have been stellar performers this year, spurred by expectations of several interest rate hikes.
A common sight at U.S. supermarkets these days, a lack of milk, pasta, berries, and more, as supply chain issues leave store shelves empty.
There's no meat, no toilet paper. It's just crazy.
High demand for groceries combined with soaring freight costs and Omicron-related labor shortages are creating a new round of backlogs. Katie Dennis is VP of Communications and Research at the Consumer Brands Association, a trade group for packaged goods.
What we're dealing with right now is we had a supply chain that was kind of already at its breaking point, and the Omicron wave has been really devastating in terms of a labor impact. We don't have a food shortage, we do have a labor shortage.
The consumer packaged goods industry is missing around 120,000 workers, out of which only 1,500 jobs were added last month, Dennis said. And the National Grocers Association said that many of its grocery store members were operating with less than 50% of their workforce capacity. Meanwhile, experts say demand over the last 5 months has been as high or higher than it had been in March 2020 at the beginning of the pandemic. Growers of perishable produce across the West Coast say they are paying nearly triple pre-pandemic trucking rates to ship things like lettuce and berries before they spoil. Warren Briggs left his market just outside of Washington, D.C. with far less than what was on his shopping list.
And I went to get some bananas, and there's just 4 or 5 bananas. There's been no salads for 2 weeks. And so, you know, you look around and you go to the places and there's nothing there. It's just, we just never had this before.
The CEO of ConAgra Brands, maker of Bird's Eye frozen vegetables, told investors last week that supplies from its U.S. plants could be constrained for at least the next month, while Albertsons CEO said he expects the supermarket chain to confront more supply chain challenges over the next 4 to 6 weeks.
Shoppers have helped drive Britain's economy back to where it was before the health crisis began. New numbers Friday showed growth of 0.9% in November. That was more than double economist forecasts. And it took GDP back above its level in February 2020. Britain's economy went on to shrink 9% that year as lockdowns bit hard. That was one of the biggest slumps among rich world nations. November's gain was partly driven by early Christmas shopping. Construction also recovered from several weak months. The current situation still looks uncertain, however. GDP is expected to take a fresh hit in December amid resurgent health worries. Data earlier this week showed record levels of staff absences around the turn of the year. But health experts say the latest wave may already have peaked, and analysts say the blow to the economy should be short-lived. Now the main risk to growth may be soaring prices. Inflation is predicted to hit a 30-year high of 6% or more in April, driven partly by higher energy costs.